Welcome to the Daily Business and Finance Show. Charging ahead, electric vehicle stocks energized by federal funding, Spirit Airlines navigates financial turbulence, Alibaba and JD.com/iPhone prices in China. Humana faces a slippery slope with profit cuts due to rising medical costs. Supermicro stock soars with increased quarterly guidance. Wall Street celebrates second best day of 2024, led by chip stocks and Apple. iRobot faces potential block from European regulator on Amazon sale, while Taiwan Semiconductor rides high on 20% revenue growth forecast. Stay tuned after the short ad break to delve deeper into these headlines and more. The United States Transportation Department is allocating funds amounting to $148.8 million for the repair or replacement of approximately 4,500 electric vehicle charging ports spread across 20 states. The objective of this initiative is to enlarge the national network of chargers to a total of 500,000 by the year 2030. This announcement has positively influenced early trading for stocks related to electric vehicle battery charging, including companies like Blink Charging and ChargePoint Holdings.
Spirit Airlines experienced a 7.4% decrease in share value after a court ruling prevented its acquisition by JetBlue. The airline is currently considering various financial strategies, which may include refinancing its debt of $1.1 billion due in 2025, but it has ruled out restructuring. Industry experts suggest that Spirit might opt for Chapter 11 bankruptcy filing or seek an alternative buyer, even though this could lead to regulatory challenges.
As we approach the Chinese Lunar New Year, significant discounts on iPhones are being offered by Alibaba's Tmall and JD.com. These reductions surpass even those made by Apple itself. This development occurs as Apple contends with heightened competition in China from competitors such as Huawei and Xiaomi. Reports suggest that iPhone sales have seen a 30% drop in the first week of 2024 compared to the same period last year.
Shares of health insurance provider Humana have taken a significant hit, dropping by 13% due to medical costs that exceeded expectations. This has resulted in a revised forecast for the company's annual profit. The new prediction stands at $26.90 adjusted earnings per share for the year 2023, marking a decrease from the earlier estimate of $28.25 per share. The primary reason behind this adjustment is an uptick in Medicare Advantage medical cost trends and increased use of inpatient services towards the end of 2023. Furthermore, Humana is currently reevaluating its outlook for 2024 based on these newly emerging trends.
Shares of Supermicro experienced a 7% surge in after-hours trading following an upward revision of its sales and profit forecast for the second quarter of 2024. The tech hardware manufacturer now anticipates net sales to fall between $3.6 billion and $3.65 billion, marking a significant increase from the previously estimated range of $2.7 billion to $2.9 billion. Adjusted earnings per share are also expected to rise, with new predictions set at $5.40 to $5.55, exceeding the earlier guidance which ranged from $4.40 to $4.88.
Thursday saw Wall Street closing on a high note, with semiconductor stocks and Apple taking the lead. Despite a slight downturn in managed care stocks due to Humana revising its profit guidance, the Nasdaq Composite experienced an increase of 1.35%, while the S&P 500 grew by 0.88%. The Dow also saw an uptick of 0.54%, largely attributed to a significant surge in Apple shares. In other news, Treasury yields kept on rising as bond sell-offs continued, spurred by anticipations of rate cuts from the Federal Reserve.
Shares of iRobot experienced a drastic fall of 40% in the wake of news that its sale to Amazon, worth $1.7 billion, might be obstructed by the European antitrust regulator. This development has arisen amidst apprehensions from investors regarding reviews of the deal by both European authorities and the Federal Trade Commission, particularly in light of a recent similar deal being halted. The conclusive decision on this matter is anticipated to be made by February 14th.
The stock of Taiwan Semiconductor Manufacturing Company experienced a 6% increase in pre-market trading on Thursday. This surge comes after the company projected a revenue growth exceeding 20% in the year 2024. The anticipated growth is primarily attributed to the rising demand for advanced chips, which are extensively used in artificial intelligence applications. Furthermore, the company anticipates its first quarter revenue for 2024 to fall between $18 billion and $18.8 billion. Production at their Arizona-based plant is scheduled to commence during the first half of 2025.
And that's a wrap on the Daily Business and Finance Show. Keep investing in knowledge, stay informed, and we'll meet you at tomorrow's market bell. Farewell. I'm Montgomery Jones.
And I'm Amalia Dupre. See you later, until tomorrow comes around. This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.